Natural gas continuing its upside breakout earlier in the session, but failing and closing near the low, putting continued downward pressure on recent support. But before we go further, a quick word from our sponsor. This video is brought to you by NatGas, the world's largest retail broker, offering ultra-fast execution with no overnight fees. Find a link in the description below. This is Bruce for FXEmpire taking a look at the daily chart for natural gas. So you see this blue line here is the 200 moving average, along with this trend line identifies a key support area, also the 61.8% Fibonacci retracement. Support has held. A one-day breakout triggered yesterday, a two-day breakout triggered today. However, the bears subsequently took over and drove price all the way down to the low of the day. So there is a higher daily high and higher low, but downward pressure remains. That means that I'm not going to put too much weight on today's low, but let's take yesterday's low of 337. That is the key near-term support because a drop below there puts this swing low here at risk, 3.29, and therefore the next lower level is this trend line right here. And, if you see we go over one more day, that'll be down here around 325, and then it goes up because of the angle. So nevertheless, there's still a chance that we go higher off the bottom of this parallel trend channel. You can see the orange identifying resistance specifically yesterday and resistance today relative to the closing price, but neither of the past 4 days have been able to close above the 50 moving average, which would be a short-term sign of strength. So natural gas at risk of going lower still, but there's still a possibility of a bullish reversal and a continuation towards the top of the channel if that is sustained. All right, that is it for today, traders. See you later.